What is going on, everyone? Welcome, and it is Friday. Happy Friday, August 28th, 2026. Trading Trends with John Salama CMT. That is Rocco, the all-time high Maltese dog. We're back to the marketplace, basically, where there is a new all-time high somewhere. Today, it's in financials and Germany. So, yeah, places like Deutsche Bank are literally having its time in the sun, which is every squirrel gets a nut kind of a market. Let's get to the sheet, wrapping up the day, the week, and the most biggest movers year over year. Let's get into it. A lot going on, even on a quiet day. SPY, very low volume. Of course, it's Jackson Hole. Kevin Warsh spoke this morning and said, the Fed has its job to do. Inflation obviously surely not over, and he hinted at hikes. Like the Fed funds have been, Ray has been saying, I've been saying by New Year's Eve, I think you're looking at one hike. I don't really know if Trump's going to let him do it, etc. Or get into a lawsuit, blah, blah, blah. But looks like the market's pricing in one hike between here and New Year's Day. Today, uranium and the metals fall over 3%. It's because Kevin was really talking about the dollar having an almost 2 sigma move higher today. We'll take a look. You saw everything dollar denominated fall in terms of the metals. So big declines in uranium. Also, the metals, as I said, silver and gold, differently moving in terms of volatility to the downside. While big rises today in the dollar, Palladium catching a bid. We'll take a look at that. And volatility rising. VXX is up about almost 2%. New all-time highs for financials in Germany. And look at this. It is Friday afternoon. When you step back, what was this week really all about? The biggest absolute movers. A big 6% software rally. We alluded to this back in July. I honestly started a newsletter. Part of it was just seeing the Anthropic updates come out and really replace a lot of the different parts of enterprise software and, AI over broader tech over software. And always the technicals first. Said wait for the 200-day moving average, a couple closes above it, and we'll take a look at the chart. But guess what? It happened this week, and Bitcoin's doing it too. I'm not sure if Ethereum or crypto is later in the show. That's a teaser. Maybe it is, maybe it isn't. And a big week, 3% drop in the gold miners. This is cute. We talked about this on Tuesday. We said, I don't think this is going to keep going. This rally started in the middle of July. I think gold miners are getting tired. Boom, it is on our bottom 3 list for worst ETF performer of the week, and that's a 3% drop, literally telling you that maybe that is getting a little bit exhausted. We'll take a look, as always, all the relevant charts. Let's get to the dashboard panel as Monday's month end, and September is here, basically. So summer on the way out. Wow, August really flew by. NVIDIA down 4% after a blowout yesterday, up 8-9%. Stocks at 220. Amazon up 3.5% today. Gold, we'll take a closer look, down a big 3%. Microsoft up 2%. Marvell, my goodness, down 10%. Semis are really, really volatile. Like I said, she loves me not. You wake up in bed or in hell, one way or the other with this group. But overall, to the top side usually. But semis have peaked on June 2nd, and they're consolidating. Hopefully, they're not breaking support. We'll look at relevant charts. Stocks is at the end. Tesla down 2%. Apple up 1.5%. Salesforce up 3%. And this is really the whole reason why IGV, not the whole reason, but IGV has been, it's especially lifted by Salesforce and Mark Benioff's earnings yesterday. A lot of people, thinking that, we're going to vibe code your own CRM. So that thesis blew up for right now this week. CRM with absolutely blowout earnings had a horrendous year. I think the stock was more than cut in half. And it looks like software will live another day. And absolutely in Salesforce, don't forget they bought Slack. And they own a lot of, tech debt, if you will, as they say. Intel down 3%, part of the semi slide to the downside. Google up 2%. Russell, a big move down today, 1.25%. Well, that's it for that. All right, so intraday tape. Again, really quickly here for this bar. So Warsh was speaking at 10 a.m. out of Kansas City or wherever he was at Jackson Hole. And they love this comments right here at 10:30. It took SPY all the way to 775, peaking at 775 at 11 a.m. And then, oh my goodness, absolutely just a vomit. Look at the perfect neck and shoulders too on a intraday chart. It's pretty funny. Right here, the floor is at 771. Absolute price discovery at 775, and then take it down. The number I was watching after that was VWAP 773. Call it to make it simple, and then they absolutely gave it up at 11:30, and it would continue to go lower. It looks like we bottomed in the past 45 minutes in SPY at 768, and are now at least trying to move towards a 20 bar moving average, each bar here constituting 30 minutes. What I've said before, so let's zoom out from the noise. It looks like we're going to try to get to, in my opinion, 771 half to 772 by end of day, and it'll be at least a victory for SPY, pretty much flat on the day, if anything. We'll take a look at, like I said, all the relevant charts. SPY, as I zoom out here, put in all-time highs 15 days ago at 779. Look at this perfect floor that we put in here, 763 for about 5 days here over the past week and a half, that price discovery. I still said, looking at the counts here, September 2nd is when I'm looking for the market to get, going again. And that's usually measured by a thrust of 60 RSI from below. This candle does not look very convincing. It got Dikembe'd at 775 pretty hard this morning, and a close underneath 771 would let me know this might take a little bit, into next week. As I said, I think September 2nd for when it gets going. I'm expecting SPY to be around 764 when it hits that launching pad. That's your 21 exponential moving average. So this candle makes, this Thor hammer right here. It's what you can see right here. Looks like it might send us a little bit lower towards our 20-day, which is 765, as I said, 764 half. And then that for me looks like we'll set up for new all-time highs of about a 780 target, just eclipsing our previous one sometime in mid to late September. And that will probably, like I said, when this week or next week, right around that 764 launching pad point will likely correspond with this neutrality point of 50 RSI, a beautiful purge point. Stochastic momentum probably will level off too, similar to this and this correction at the end of July, and that should give us enough to get going. We will look at some of the things that have given me fear, potential pause, like the semis really consolidating, but I love the rotation that's happening underneath. When you see financials in Germany hitting all-time highs and European financials, it's extraordinary in terms of, risk appetite of the market. I know, yes, yields are going higher and there's reasons for it, but we'll take a look, as I said, at the relevant charts, but I do think you're going to want to own equities for quite a while. So as I said, so it looks like the market will get going in the middle of next week around 764 towards new all-time highs mid to late September. All right, let's get into the relevant charts. As always, my favorite part of the program. Here we go. All right, number one, we're going to go with the big up moves, okay? So UUP, the last thing is we always try to suggest derivatives trades, options trades on, what to do. So what would you do with SPY? I'm seeing another, as I said, 3 days or so of basing. So, you could sell vol, something like I sell a 780 and then 760. Or that's a little bit too close, 757, something like that. Strangle expiring about 21 days out and collect that theta. You can do that as well, as SPY likely heads a little bit lower, inside of 1%, before we zoom higher again in September to all-time highs. So alternatively, you could sell calls. Don't really love that trade. I don't really want to buy, the 765 puts if it's less than, very much garden variety from here until, say, Wednesday, as we consolidate and digest the Jackson Hole comments. All right, UUP is opening the show here with a big move higher. Take a look at this. This is the UUP Invesco ETF, very similar to the Dixie, more than not. So the dollar peaked just a month ago, exactly a month ago, at 28.60. Look at this ETF, and now you have the 200 moving average actually moving lower. We just crossed above 50 RSI when last time we did 48 hours within its 52-week high. A beautiful floor here at 27.70. It's honestly traded above that since June 5th, and now a beautiful looking candle up 60%, as Warsh is saying, the Fed's not done, and protecting the dollar and so on and so forth, and what tools it has and hiking. So overall, when I see a chart like this, it looks like it's going kind of like nowhere. Don't forget, this is a 10-cent ATR on a $28 stock, so this does not move. It is what's in your, in your pocket, essentially, the U.S. dollar. So it's not super volatile. This isn't, Solana. So this peaked a month ago, as I said. Moving average is going lower. Your support there is at 27.73. Again, these are all inside of 3-month levels. I think this was a beautiful surge here. Looks like this was, the floor after this. So we were talking about the dollar when it peaked here at the end of July, and we're expecting a little bit of a fallback, and look at that, all the moving averages start to go south until really you're getting some stabilization after this past couple of days, and a big part of it today, 60 bip move higher. I think the dollar is heading higher for about another week or so. UUP probably headed towards just about 28.30 even. I don't think it's taking out the previous highs, but I do think it starts to, not really a gap to fill here, but get back to these levels here of 2 days after its 52-week high. But I think today's a beautiful looking candle. VWAP's 28.12. They said mine, and we're at high of day right now in the dollar RSI highest it's been since, like I said, 48 hours of its 52-week high. So I like the dollar going higher. No real derivatives plays for this. This is more of a macro driver and overall assets because you're not going to play options on this. Like I said, a 10-cent ATR or a $20 stock. It's like paint dry. But this more, of course, goes the Jackson Hole ramifications. Let's see how we could play it in other big movers. So the dollar moving, boom, one way higher today. Also, if you're an owner of Palladium, you are pretty happy. Kind of a mixed story. Look at that candle. That really stands out to me. If you've been an owner of many metals, but in this instance, Palladium here peaked on January 26th, a la silver, very, very similar. And then a puke. This was $38, and then boom, what do you know? Cut by 50%. Let me guess. Did it go to 19? Very close, $20 even. How it goes. But this thing really fell out of hell here. It even had a split, a 5-for-1 on May 18th on this ETF. But mid-May, this thing fell out of bed. Don't forget the war is going on. It had no existence above 50 RSI until right here is the background of a basing pattern. When you see existence under 200-day moving averages and you start to see a lot of strength here above 50 RSI, it's telling me it's trying to find a new home higher. So what the chart looks like for me is this was going to be basing somewhere this week and try to zoom to a 26 handle rally off of that, a base of 24.40. So here's the interesting point. It got to 26.63 today, and then they Dikembe'd it to where it is now. So this was up much more today, almost by $1 higher. So this was up, 7-8%, I guess, when he was talking. RSI, though, still confirming that strength at a 63. My target's 26. Sometimes the market gives you a lot and a little, or a little and a lot. If you have 25.85, if it closed underneath that, I know up 4.8% is very strong, but you absolutely it did a lot of lifting in a short amount of time. Look for this to hold around $24 in the coming week or so, depending on how much they let it go today. That's an ugly rejection here, saying you don't belong where you used to in early May. Important level here, $26 or so for Palladium. I do think it goes higher over the next, in general sense, 2-3 weeks. What trades would you do? Be careful. I don't think these are super liquid, so make sure you have the option chain available. I would do something like November, 26 or 27 calls to enjoy the next 2-3 weeks. I would much rather have an entry around 24 even. If they close it beneath the VWAP today, you might get the entry on, possibly early next week, and you still possibly ride it to 26, as I think it has a bullish 2 weeks. That is Palladium, where I saw the profits of rage in Los Angeles at the Palladium. But here we're talking about the ETF. And volatility having a multiple sigma move, 1.5 sigmas, I will count for a pathetic ETF like volatility. Up 1%, that's big enough to get you on the show here. It is a down day across markets. So when you find multiple sigma movers, you got to take them. And this is it. Look at that yesterday. Oh my goodness. All-time lows in VXX. If you were at the CFA CMT event, I was, basically talking about how the market is not whispering, but screaming in your face. We don't give a, and you can fill in the blank when you have European financials hit all-time highs like Deutsche, Santander, etc. And then you have vol hitting all-time lows through this ETF. It's the market saying we're going higher. We don't care. This was, I think, during the NVIDIA earnings when it was like down 4% in print. So just super bullish. VXX, you'll get in your flowers today. This one, a mixed picture. Honestly, I see a little bit of, it's oversold. It was just oversold yesterday. It's just erased that ugly title today with a 31 RSI after this 1% bounce higher. I would look for messy dead cat bounces over the next 2 to 3 weeks. I honestly don't even think you get it, but structurally it looks like it may have it in place to get to about 1950 to 1970. Absolutely pathetic. It could be any kind of a scare, probably bonds. Which one's right? Equities or bonds? Who's going to pay the piper? And is the global economy going to collapse? Is the Fed enough tools? Whatever. You make up the narrative. But that's what likely gets you that dip. Last thing on this, VXX, when I was looking for it to decline, I think it was the end of July. I want to go to these candles. I think it's when we had this kind of spike right around here around 22. I said, look for the 19 handle, and that will let me know, like at least this part of the bull market, not this part of the bull market, but probably that 2-3 week cycle has been completed. This thing, and not only went through 19, this thing got to 1807 yesterday, and now trying to cement itself, trying to further it to 1829. So I'll look for dead cat bounces. Again, similar to UUP, I don't play derivatives trades, options plays on VXX. It's more for a macro background driver. That's VXX. So look for it to messily probably go lower and then meander higher towards that 19.5 level, and then probably put a fork in the rally for that. Decline, incline, it's inverse market essentially. Let's look at the hitters to the downside today. They're absolutely axing uranium. Look at this. Tell me technicals don't mean anything. Oh my goodness. Look at the Dikembe on the 26th. And this is amazing. No one knows anything. I know. Everyone, on memes, online, Substack, stuff like that. 2026, the year of uranium. It was before the war. I remember in a presentation talking about uranium in January, year in reviews and forecasts, stuff like that. Uranium peaked January 29th at $62 through this ETF, fell into hell about 2 weeks into the war, really had a great rebound, etching back to $58 about early May, and then really fell into hard times early June. Bottomed out 52-week low, July 29th at $37. And look at this, an amazing Dikembe rejection 2 days ago. It got to 50 and then sent it immediately lower. The 200 moving average, very important, is at 48.5. Nice, easy number to understand. Starting to go south. 200 moving average has been in that behavior since America's birthday, let's say. Still above 50 RSI for 3.5 weeks, but really an ugly rejection meaningfully. So now what for uranium? Why are we talking about it? Because it's down today 5.5%, nearly horrendous day. Look at that candle going all the way south. Messy chart, to be honest, when you have a southward 200 moving average and ugly rejection basically at that level. I don't like this one here. This one I expect to move south over the next 2 weeks. The reason I was talking about, 2026 year for uranium is just how, the show is called Trading Trends, but consensus can sometimes not be right. And you always, timing is important, but you can't time the market. And that's why time in the market is better than timing the market. But this one looks like it's going to head south to about $45 even messily over the next 10 days or so. I would avoid these 50 calls. Look nice to sell. They're now, obviously 10% out of the money or so. But I like that. I don't think it's ready for that prime time anytime yet. What will really give up the ghost here and really break 50 RSI neutrality, have more sellers than buyers line up, is not only closes like today. That's a really ugly candle after you had an ugly rejection. So this is like you're getting your manhood taken away. Would be closes under 45 even, and they can get there possibly today, but more likely Monday. And then that would potentially get you a bleed to about 42. But I do expect to take a bleeder. In terms of trades now, like I said, the one more clear on the board was selling the 50 calls. Don't really love selling the, possibly 49. Let's sell something like that about 3 weeks out. I like that trade. Otherwise, in terms of the puts, you can also buy the November 42 puts if you want to participate to the downside and what looks like a rolling over trend. I already talked about the confirmation. A couple closes out under 45. Yikes, look out. You're going to have some sellers in uranium. All right, gold getting smacked. I told you if you're a metal, if you drop it on your foot, it probably is getting hurt today. Gold peak January 29th. A lot of other folks also saying, the year of gold. Peak January 29th at 510. Had a still an impeccable, relentless chart until early June, honestly. And you do not want to have been in gold unless you're just building a position and basing dollar cost averaging here about 360 and under, ideally, the 200 moving average under 410. If you believe in that, it just, as of the past 7 days, is a very interesting chart, gold right here. As of the past 7 days, has now gotten above its 200 moving average for the first time in nearly 3 months. It got overbought. Relative strength, confirming that strength. Love it. Today, horrendous little candle after you have Kevin talking about dollar strength. So they're vomiting gold here really significantly, down 3%. It was down 2.8 when I was drafting the doc here. Gold, I know, like for the next 2 weeks, it looks like to me this ceiling, similar to what we just had in the uranium chart after that rejection, similar 430 for GLD is basically your equivalent level, although this has a stronger chart overall than uranium, but we're over uranium now. I don't like this one for the next 2 weeks. This one looks like to me they're going to let it get to about 4. It did so much today. This was at 425 this morning. The low is right where we are. Close under 414 today would confirm that weakness, and it looks like it's going to. I was going to say 405, but that's only $4 away. So at least another percent downside. You can probably sell those 430 calls going out 3 weeks. That I think it's regular set expiry now. Alternatively, it's a little bit spicy. If you want to participate to the downside, you would buy the November like 395 puts and immediately exit once, to be honest, this gets to 405 or 400 even in the next 2 to 3 weeks. I think they're going to let it there. This is an ugly kind of a rejection here at the 430 level for GLD. Trend moving average pretty much still rising, losing slope there at 415 even. We thought it was support, still a very finicky area for gold. I told you the two ways how to play it. All right. And then again, like I said, metal, if you're a metal, I didn't want to keep this, the correlated show, but losers only came from one real specific area today. It was silver. And look at this. D-Day for silver, rising 200. What you going to do, silver? To me, it's like a running back. When I see a rising 200 moving average, it's like a running back. Saquon trying to say, get off me, and you get the stiff arm, and you go. The 200 day is basically Saquon's stiff arm. Ugly right here, 200 moving average for you home gamers. It's 65 even, nice, even, cute number. It tried to get there. Today, this morning, 64.30, and bow. You can see a rug pull right there. They pulled it and hit 59.99. Are you out of your mind? And right here, it's basically low of day at 60.15. 55 RSI, stochastic momentum mix, letting me know it needs to cool off a little bit. Had a very strong rally over the past couple of weeks. We've been talking about the metals. A lot of folks have. And like I said on Tuesday's video, I said I think that's a little bit for now. In terms of trades, this one looks a little bit. All silver trades are essentially spicy due to the vol. This is a ATR now? $2 ATR on a $60 stock, meaning it basically moves $2 inside high low on an average for the past month. So pretty crazy. A stock's trading $60. So what looks like evident to me is you could sell I like selling those 65 calls. It's now almost 10% out of the money going out 3 weeks. Alternatively, if you want to participate to the downside, I think this is going to have an ugly 2 weeks. You'd want to buy the November 59 puts. Yeah, some people are probably going to go degenerate and go, buy 56 and do it October or even, 0GT or whatever. But this looks ugly. Look at this rejection here. Rising 200 day. I love giving a dog a long leash, although not this one because he goes a little crazy. He gets a short leash. But here, right 200 day, I always want to, give you a bone. And like I said earlier in the show, above a 50 RSI, that's a basing pattern. And then you get a rejection here, just not ready. It's like life. Good things are worth doing. They take longer. All those adages. Rest in peace, Dolly Parton. Working 925. Jolene. All right. Top 3 gainers of the past 5 days. Let's do it. I'm looking at you, software. The area to be in this week. We talked about it before. I'm a big technicals person. I don't want to just chat on something into oblivion. Although I mocked software for the longest time, I said, guess what? I'll turn my tune when it's a couple of closes, 3 to 5 above a 200-day moving average. And that's why I said, I believe it was before this momentum breakout money flow buy. It was more so, I have July 29th written in my notes. Yes. So we were looking here. I said, it looks like it's going to possibly do in the next week. Then I'll turn my tune. And basically about 3 weeks ago, I turned my tune on software. And look at this. We're essentially at 6-month highs. And then crypto follows. That's basically what I was talking about on the All-Star charts last Monday with Korean internet getting a bid. You saw a lot of rotation. You would think crypto was finally going to wake up. And it finally did 2 weeks later. Look at this. Higher lows here in software. A little meerkat here at the beginning of summer. And then still respectful, higher lows, and now look at this magic you're getting here. The 200 moving average is flatlined at 93.70. If all you software folks, if you can get, I think it's going higher. The candle patterns you really want to look at while taking the temperature of the baby here. So once you have, for example, 9 month, what is this? 9 month highs, and you're overbought 1, 2, 3, 4 times since June. I know that the pizza is good at that store. Okay, I know something's for real. It's legit. It's happening. It's likely going higher. I don't think I want to sell, 93s and bet on the downfall. That's dumb. I'm not, cocky like that. I can see the charts here and the higher lows. That's it. So I think it's going higher. Trades. This one did a lot. I mean, we're talking about it. Why? Because it had a 6% week. It's down 70 bips today. So let's see if it's digestion. But this is up 6%. Over the past 5 days, up more than 1% a day. Today, down 70 bips. A lot of price discovery here going back to Thanksgiving at the 110 level. Your 52-week high is September 23rd of last year, so almost 12 months even. A 118 is that level. And my goodness, your support obviously back here at $94. I think it's going higher. I think pullbacks that to $102, you should buy them, and it will reward you higher. This is a short squeeze as well. That's how you get a blow up to the upside in names like Salesforce and many companies like that, Monday.com, Jira, whatever. A lot where death was written on the door. It looks like it's at least postponed. If not, innovation is going to help. RSI looks absolutely strong. Look at this. Many worse things you can own than software since July 28th, right here at a 92 handle. So again, I like the support at 93. I don't think, let me say, trades. I don't like rushing and buying the calls here because my ultimate target short term is, frankly, 109. I think it's reached it from 100 to 110 in about 2 days thanks to Salesforce. So calm yourself. I'd rather, buy pullbacks to 101, 102. Other trades, don't really love selling calls here. So I don't love that. I don't really want to. Yeah, I would just honestly more so wait until you got to that 102. Otherwise, I'm a breakout trader. You can also buy them here. Of course, turtle trading for life. You can also just buy them right here, and your stop would be 2 ATRs, which is called $3. So 3 times 2 is $6. So 109. If it goes to 103, get out because it's very likely going to 101, maybe even lower. You could save yourself that difference. Software, number one area this week. If you were long, congratulations. It looks like the move is on. Congrats. Number two, Taiwan. When I think Taiwan, you got to think Taiwan Semi, the number 2 space in all the world. So it was software by quite a bit, moving the post. Number 2 is Taiwan up 3.5%. So less than 1% a day. Today down 60 bips, but S&P was up about 50 bips this week. So just letting you know where the relative strength came from. Taiwan, beautiful looking chart. They're not thinking about selling their Taiwan stocks. Of course, much of this Taiwan semi. Buy pullback, similar to the IGV chart. Buy, although this was impeccable, this is a beautiful looking chart. Your 2-day moving average is at $83. That's $24 away. So just psychotic lift. And above 50 RSI also since the beginning of August. I'm seeing a little bit of chinks in the armor a little in terms of, I think Kenny Glick says you can't say that on YouTube, but they'll take you down. Stuff in the armor. Just see a little bit of ugly candles here recently. It did have a strong week, like for example, that rejection here at 109, and then when I saw today 109, I know the all-time high is back here at 113 on June 22nd. It's just something that calls for concern, a little bit for concern. I want to see how much springs it has, but it is part of the show that we're talking about for the top gainers. You couldn't have been anywhere better than Taiwan this week except software. So buy pullbacks if it comes down to 104. Kind of don't hate the idea of selling the 110 calls. This is a $2 ATR with $107 stocks. You're not going to get paid immensely. Don't love the rejection, so it's making me get pause. You don't really, with options, every day costs you something called theta. So I don't want to immediately right here, just on the breakout, without potentially having like a coil, go out and buy those November 110 calls. So I want to be careful, if we were doing like live shopping here. And I don't want to outright buy the 104 puts because they might not, get there. But right now, VWAP on the day is 108.5, and they said no, thank you. And the low of day was just 20 cents ago. So we'll see. It looks like I'm not sure if that was the entire 5-day rally. So more of a wait and see for me on EWT. I think very likely it's the 104. You should buy it, and then it gets to 109, and then more than likely gets the Kembe. But I'm foreseeing a rocky, bullish 2 weeks for Taiwan continuation. And the natural gas to close up the up moves of the week. Not a massive week. It was really hard to find massive gainers. It was software up 6% in 1 week, Taiwan up 3.5%, and then nat gas up 3.5%. Let's take a look. Nat gas with the all-time low 3 weeks ago in ugly, meaningful Dikembe just yesterday at 1075. Sent it to its knees today at 1030. Is your natural gas. Yeah, that's a meaningful Dikembe to me. This one looks like it's moving south, in my opinion, for the next 2 weeks, but not grossly down to about like 10, 15 or so, which is its 21-day exponential. No real trades. I don't think you're going to get paid selling, the 11 calls. Pretty pathetic. This is now 27-cent ATR on a $10 stock. I don't know why I talk about it. All right. Top 3 losers of the past 5 days. Oh, this was how technicals. It's not Am I psycho or psychic? We were talking about gold miner, and I said, okay, this one looks like it's getting a little bit tired. It was Monday. Monday's date was, or Tuesday's rather, I think 24th, 25th. So that was right here. I said, look for the candle formations. You want to start seeing them getting cut in halves. This was up 70 bips, up 2, beautiful, up down 3, up 1, and then a real yesterday up 1, and then today messy, down 4.7%, enough to land GDX, the worst ETF on the street, down almost 4%. I'm doing it again, 5-day trailing. It's a 61 RSI. So now what for gold miners? So very interesting. Gold miners, we were saying there was a monster rally. It began, honestly, I had it back there after essentially a thrust from 60 RSI. VWAP then was 78 bucks. It basically went straight north, one way to 105. I said, cool it. More than likely, this heads to about $93 over the next coming weeks. That's what I'm still seeing. Like I said earlier, gold and these folks on a good 2 weeks. Same thing for this. GDX, yeah, I would just be, I think it's going to be magnetized towards $93. Did a lot today. They're letting you know it's not ready. I think it just hit low of day. Yes. VWAP is 100.7. They said no, thank you. They're setting that one lower. So this is, again, a 200 moving average is 89 even. Not calling for all that. I think 93. Trades, gold miners is vol, bro, almost 4 ATR to $98 stock. So I could sell the 105 calls. You could sell the 102s if you're a lot more spicy, except expiry. Alternatively, if you want to participate in the downside, I would go buy the November 93 puts. All right, and you can always sell something against it to help subsidize the trade and collect some theta against. I know some folks don't like that because you're playing multiple games, but it's all one big casino. All right, and then lastly, what did we do? Oh, no, 2 more. Silver, if you were metal, not a good week for you, and Warsh put the exclamation point on you. Look at this Dikembe. Oh, my goodness. So this is silver. We had this earlier, more to watch since we had it in the opening segment, but we're talking about silver because down 3.5% this week. Same as gold miners, 1-for-1 correlation. And then the last one for the week over week, oil. Not a good place to be. Down 3.5%. So interesting. I said there's many worse places you could be than oil. I said this was going to have a beautiful part of the rally, and it was done. I think last Friday I said you're going to want to get out on the 21st. Right there. Look at the Doge. Look at the indecision 2 days in a row, knowing that rejection from July 23rd at 140 spot. Very tight Bollinger Bands. Just if nothing was going to happen there to the upside, it was going to break south. I still see this continuing throughout another week and a half. Look for USO to hold its breath a little around 127, meaning I don't expect it to go south in one candle, bearish engulfing. Today, actually, somewhat constructive. We're talking about it because it's the third worst ETF this week. If you own oil, no bueno. Today, it's not done yet. It's down 0.25%. Not huge, but you didn't have to add insult to injury. This one's going south. I do believe you can sell the 135 SEP calls. Doesn't look, I don't think that will hurt you. And if anything, you can buy the 136s against it, much cheaper. So if it does rally, then you don't get, carried out. Alternatively, if you want to participate in the downside, do the November 127 puts. You can even get spicier and do something like the 120s. And then again, once it gets honestly to 125, I would get out. But oil continues its south move now as you see this kind of sloppy formation. All right, top 3 trades of the past 5 days. A lot of traffic here. If you're long software, you crushed it. If you were short gold miners, congrats. Also long Taiwan, short silver. Those were the 4 trade du jours this week. We already talked about if they have legs or not. And my favorite part, top 3 trades of the past 52 weeks. Number 1 on Young is South Korea, up 145%. It's almost always here on the list when we do the year-over-year movers. This one's just a crazy rubber band. Thank you, Samsung and Hynix. And guess what? I think this one right here, right now, I think you're getting a setup. So let me see what happened today. Down 80 bips, up 145% year over year. We talked about Taiwan. They're not thinking about selling it. Same exact thing here. Peaked mid-June, June 18th at 221. Got cut all the way to 144. Still rising 200. And still for right here, the past 2.5 weeks, holding 50 RSI. Ugly rejection you want to be mindful of 11 days ago at 190. And then yesterday at 183. And then today at 183. So just something to be aware of. VWAP's 181.30. They said no thanks. I'm expecting this one to base. You may have a chance to get this at 175 early next week. If possible, I would take, because these candles don't look just super strong to me. It still looks indecision with an elevated base. But I'm not want to rule out a trip in the cards to 175 even. I would take it, though. I think this one's headed to 190 over the next 2 to 3 weeks is the point to get essentially Dikembe by that same candle. Very meaningful. And also just the existence. It got Dikembe there on July 6th as well. It hasn't lived in a North 190 world since July 1st. It just hasn't been it for South Korea. I don't believe by any sense of the of stretch of the imagination this is done. So for me, this is almost like semis, which we'll get to soon. Teaser. This is putting in a long either wedge or a long rectangular box of consolidation. I expect this floor to hold and then a breakout ultimately to the upside with a crazy breakout, probably of something like 9,000 S&P's equivalency. Later in several months. So I think this one's headed higher in the next 2 to 3 weeks. I like it if you get around 175. Like I said, the target is 190. Trades, I would do. Wait for it though. Like I said, options always cause you something. So this one's not convincing to me. I don't like buying options a day, under multiple closes under VWAP. Doesn't let me know you're limping into it instead of what I'm saying now. Take the shot, bond style. So I would wait a little bit. If you get to 175 even, I would go and get those November or December 190. It's expensive, so probably November's 190 calls. And I guess you don't even have to sell anything against it if you don't like. Alternatively, you could sell the 155 puts going out in September, see if that pays you anything. But yeah, it looks like South Korea to me the year-over-year leader. So all the Momo junkies, get ready. Looks like to me it's getting ready to go higher, and I think this is going to be higher in the next 2 to 3 weeks to get to Dikembe right there. Number 2 leader year-over-year. So semis, I just gave it away. South Korea up 145. SOX, pure semis. SOX is the field. Micron, Taiwan Semi, Broadcom, NVIDIA. It's not just snorting NVIDIA like SMH. Higher concentration by about 5-6%. SOX peaked, as I said, June 22nd at 656. Rising 200 days at 426. Look at this. Pretty much every time it gets anywhere near 50 RSI, they've been selling them since the week of the all-time high. So something to be aware of, and it's causing me a little bit of internal, I want to say, concern, but it's really just trees don't go to the sky. If NVIDIA is going to be worth 13 trillion instead of 5 now, I don't disagree, but I don't think it's going to happen tomorrow. Hence, you rotate into Germany financials, maybe possibly even bonds. Similar to what I just said about EWI, as this is very highly correlated, look for this one to base and to get Dikembe at a different level, meaning I'm looking for this one to basically base up to and under 530. It's surprising how weak it is. Here's my cursor, that line at 530. It hasn't existed there for a week and a half. And this is with a very strong NVIDIA earnings. And understand the floor there at 465. That is a local floor going back to the end of July, but also our ceiling from April, if you recall, just about a month into the war, when we went overbought for truly, 2 months straight, when this was the run of the year. So I think this is higher the next 2-3 weeks. Ways to trade it. You can sell the September 475 puts. Be careful. You have to grab your balls for a little bit because I think it might go lower. You could buy, the 470s against it and such. Alternatively, I would wait for, as I said, to base. I almost want to rather buy strength here. So I'd rather get closes closer to 530. But ultimately, my target for this is to get a Dikembe at 550 even. So just even under the levels from prior. So told you what puts you could sell. And in terms of buying calls, you could do the December 550 calls to play this in the next 2-3 weeks. And then number 3, not straight correlated to South Korea or semis, is copper miners up 93%. So this is where your alpha has been from last Labor Day through today. It's been South Korea. I've been talking about it since literally Christmas. Semiconductors, same. And copper miners. Copper miners, very similar. This is interesting. group with silver, with palladium, uranium, all these things that peaked at the end of January. But look what's here. And folks love copper miners. It's more industrial, obvious usage. You really need it for the whole AI build out story. But look what it's doing. It's getting on the back of it, of its all-time highs, very close. I'm talking it was within $5, but very recently it's been getting to at $98. So we talked about setups in EWI, in SOX. Are you getting one in COPX? I don't think so. This one looks like, to me, messy cycle for a shorter term, but August 20th looked like it had the beginning of a thrust here from this rally. I would expect it to last through about, September the 5th or so, but it's getting, Dikembe here, but still outperformance, very strong Chaikin money flow, meaning those orders, especially from 3 to 4 o'clock, great looking candles. Today's ugly. That's a bearish engulfing. Today's candle actually swallows up almost 3 whole days of trading, which is why my tune short term is a little less, constructive. So something tells me this reached its target at 97 short term. A hell of a run towards its all-time high of 100 even, essentially. I look for this one. You don't get a setup in COPX. I got the correlation of all the metals dragged down for the next 2 weeks. It will affect this one. So copper miners next 2-3 weeks, no likey. Ways to participate. Again, this is your number 3 year-over-year leader. This is taking the bronze. So be careful what you sell, in terms of upside on this. But I suppose if you want and check the liquidity on this in option chain, it's tough. The 92.68 ATR, $94 stock. You can sell something like the 96, 97 calls September to participate in the downside. You can also, this one's volatile. You can buy, I think you can more so for a short-term trade, buy the November or December, whatever's listed. This one's choppy. 89 puts. It's volatile. When it gives, it gives. And the bearish engulfing to me is kind of exclamation point, saying it reached its objective from this several different levels, honestly, of when the bullishness gathered. But I mean, this was at $77 just a couple of weeks ago. So exclamation point, as we've said for a lot of these metals, like Metal Monday or Tuesday, but the gold miners getting tired. Okay, that was it. Thank you very much for joining. Have an awesome last technical unofficial weekend of the summer. Treat others well. Go get some ice cream and whatnot. Peace.